Good morning, traders. Richard Jacobs here, and welcome to the Underdog Weekly Perspectives Report, where we have a look at what's been happening over the past trading week and form some views, perspectives on what we think the market's going to be doing over the coming days and weeks. Looking at the last trading week through this daily chart of the top 40, you can see that it's been a very sideways week. We've had pretty much 1, 2, 3, 4, and with the exception of, I think, last week Monday, we've pretty much just we haven't really set any new highs at all. We've not set lower lows at all, so we've really been trading inside of that candlestick over there, printed on the 9th of October. And so we've seen quite a bit of consolidation, not a deep retracement at all. The stochastic has moved into that overbought territory, and it's been hovering above in that overbought territory all week. Did cross below its signal line, but it's sort of, again, it's not coming back sharply. It's sort of just consolidating sideways over here and meandering slowly down. So we're not seeing that deep retracement or any massive retracement at this point. Conditions remain bullish, and at the same time we saw a significant drop-off, and we continue to see a drop-off in volatility playing out over here. We're now at our lowest levels in coming back to probably around about I've just highlighted it there, going back to June 2014. So volatility very or extremely low at the moment, in both absolute terms and in terms of the drop off that we've been seeing of these very narrow ranges that have printed over the past few trading days. So where to from here? Well, what we sort of keeping an eye on is obviously the major trend remains bullish, so you'd expect that bullish trend to continue. Looking at the out of markets trading action at the moment, there looks to be a significant push to the upside coming at the start of the next session, so we're actually expecting that higher high to start playing out. Whether what's going to be important is also whether we can see that higher close in the market continue to push to the upside, but certainly it looks like this past week has just been a pause in the bullish trading action for now. So further upside is going to be the favored direction going into the new week. If we drop down and look at this through a lower time frame lens, so this is the 15-minute chart of the top 40. One of the things we highlighted, you probably see it marked up on the screen here to our daily subscribers, is we have this here's this choppy trading action running through from Monday. It's really just stuck within a range between these two levels, and we said what we want to see is a breakout of that range. We had a potential double top over there, which actually triggered, I think it was on Friday, triggered there with that lower close. Now if you'd gotten short over there off that validation, you'd have looked for the market to push further down towards that previous price structure level right down here around about 50,800. Unfortunately, what's happened is the market, if you were short, unfortunately we were short, the market actually just then immediately reversed on a dime, pushed to the upside, and actually pushed all the way into a continuation move to the upside, or break of structure to the upside over there. So very choppy trading action, especially on Friday, with a push down and a push up in that sense, and that would have whiplashed a few traders as well. But the end result is what we have here is a higher high and a higher close. Market looks to be continuing to the upside, and as I said, if you look at it through the lens of the previous price structure, let me just get my ducks in a row. Yeah, it does look like, well, what we're going to see is about a 350 point push to the upside, which will bring it in at around about 750s, 51 750s over there. So that's how we seeing the new week opening. Trading opportunities, nothing much here. We've got the break happening already, or the continuation, strong continuation move. What you probably want to be waiting for is some kind of a you know, if the market pushes to the upside, wherever, I'm not going to try and predict where it's going to go, but we can have a look at that anyway. You'd want to wait for some kind of a retracement and then try and get long for the continuation move to the upside. That would be the sort of preferred play from a price structure perspective. Where could the market go to? Let's have a look here. If we look at this, you know, we've got this move to the upside over here. Probably want to look at, you know, if you want to try and sort of form some views, you probably look at that leg over there. Yeah, around about it. Well, that would sort of predict that the market would push up into that 51,750 levels and then do some consolidation. Another level to watch is around about up at that 52,000 level over there in terms of the projection to the upside. So those are probably levels one could initially use. Again, we're in uncharted territory, we're in new high territory, so difficult, one can't look left, there's no previous price structure to work with. So these Fibonacci projections, they can be quite useful in terms of determining where the market may potentially look to consolidate from. So to keep that in mind going into the new week. Let's look at the international charts, see if there's anything happening over there we can work with. Starting out, this is the daily chart of gold. So gold, this is a trade that we highlighted a few, probably more than a week back, and it's been slowly playing out in our direction. It's a long trade in gold, two targets. One is around about this previous price structure over there. The other one is back on this gap close over here, and that's continues to play out fairly nicely as the market pushes to the upside. So nothing to just sort of exercise patience in terms of that move. Looking at it through the hourly, again, nice trend continuing to develop over here as the market pushes to the upside, puts in the higher high retracement, and then pushes to the upside again. If you're trading on this shorter time frame, on an intraday basis, probably a few opportunities in there. Just highlight how you would find them. Probably on that leg over there would have been a good opportunity as the market retraces back into the 61.8, although difficult, you know, it's quite shallow. It pulls back into the 61.8 and then puts in a higher close over there. So maybe over there you could have gotten some kind of a long position, although it would have been fairly tight trying to ride it to the previous swing high. So yeah, you may or may not have gotten on that kind of opportunity, but when the trend is this strong, so it's not a bad idea to try and catch these little intraday swing highs, this intraday retracements back into previous price structure, back into previous Fibonacci levels, and try and get it at least back to the previous swing highs. So we are pushing to the upside. If you wanted to adopt a similar approach going forward, what you would do is, let's get a Fibonacci retracement. If we do see a retracement, obviously we don't see a retracement, this doesn't work. We'd expect some kind of a retracement. If it does play out now, maybe back into this zone over here, you know, back in this previous price structure, lines up with the say the around about the 61.8 Fibonacci retracement. So what you want to do is you want to wait for that move back into there, and then you wait for the continuation signal and try and ride it at least to that previous swing highs. So you can see these are very tight in terms of values. So these are the kinds of things you can look at for on an intraday basis if you want to trade the market as such. Okay, so that's gold. Let's have a look at the currency. And that's Friday's trading action over there. Rand continues to strengthen, coming off the top of this range that we've been highlighting at the medium place, all the way from sort of last week of March to beginning of April, mid-April kind of thing. We've just been stuck in that sideways range. but this last few days have seen the rand strengthening quite a bit. And if you look at that, you probably see it better on the hourly. There we go. Again, just clean that up. There we go. So we got another leg down here in the strengthening trend. Boom, all the way down here. Difficult to try and get on this last leg of the move. With the market pushing down so hard. I think we had a nice trade in the week where here it is. Market pulled back, I think, into structure and then pushed to the downside. When the market pushes back into structure and pushes down to the downside, again opportunities on the hourly there. So what we're seeing at the moment is we are seeing, but yeah, there is a retracement starting to play out over here, bit of weakening in the rand. So what you would do is put your fibs on this last leg of the move, and you're probably eyeballing, I mean there's no real price structure over there. Do you want to zoom out? Yeah, I mean you're probably looking at this zone over here, round about that. You want the market to actually, or the rand to weaken all the way back into that 1340s, 1343, 1340 level over there, and then look for a continuation move to the downside. So keep an eye on that on the hourly as a potential trading opportunity. Let's start with the stock markets. Hang Seng in the east, pushing to the upside, higher highs. All very bullish over there. Again, a market that moved sideways in the past week and now looks to be continuing to the upside. So let's see what's happening on the hourly on the Hang Seng. Yeah, there's the breakout of the range. Very similar to our market, the Hang Seng, a lot of the time. Here we go. Boom. Got the break to the upside, higher high. Higher close, and again what you want to be waiting for is you want to wait for some kind of a retracement if you want to get long this market. DAX. DAX on the daily, you got the push to the upside over there. Ranges have been fairly tight over the past few days, so you're seeing the same drop of volatility that we're seeing on our own markets, or similar. Bullish on the daily, obviously. On the hourly, we've been highlighting this resistance level, boom, boom, where the market's sort of gone up, tested, but we also highlighted this sort of curving price action over here. You know, when the market went up and then it started forming this series of lower highs, and then suddenly it started making these higher highs, and we said, you know, there's an increased chance that we're going to have to see that break to the upside, and that's exactly what we're seeing over here. Markets broken structure to the upside, right there. Quite a choppy little break, broke structure, then pulled back, then continued to the upside kind of thing. But certainly looks to be pushing to the upside at this point. Yeah, I'd let this play out, see what happens in terms of the price structure, let it clean itself out, as either putting in a higher high over here or some kind of a retracement before getting involved. But certainly it's looking looking more bullish in terms of direction on the DAX. Right. FTSE. We're back up here into this potential resistance zone. I remember one of the things we said was we're waiting for some kind of a signal here on the daily, maybe a lower close as an ideal, where we could actually get short out of the top of this range of that the market's moved into and try and catch a piece of the move to the downside. We haven't seen that lower close for as yet, so things are looking a bit more bullish, but we're gonna wait, not push anything, just wait and see if we're gonna have a break of that structure to the upside, or if we're gonna see that lower close printing for the range trade. So we've got the benefit here of just waiting to see what the market does before responding, which is great. On the hourly, this is a trade that we'd highlighted to our daily subscribers. What happened over here's market was pushing to the upside. So I just want to get my price structure in. I think we got the potential entry around about these levels. Okay, a couple of things here, which is, again, it depends on your trading strategy. We had this, the market, let's just highlight the whole trade. We had this push to the upside where the market had put in the higher close, and we had a retracement all the way back into that 61.8 level, and it lined up with this previous price structure over here. So we waited for some kind of a continuation, confirmation, higher close, which we got around about these levels over here. So the trade setup was to get long and try and drive it all the way back up to these previous swing highs. Now, depending on your particular trading system and trading strategies, you may or may not still be in this trade, because what happened was the market actually flushed to the downside over here. It would have gone past the stop levels, which was around about these 113 Fibonacci projection levels of this leg of the move down, or this retracement level. And if you put a hard stop in at those levels, you certainly be out. If you were working with a soft stop, you may still be in this particular trade. Sorry, I just want to check one other thing while I'm doing that. So yeah, as I said, let's give you both iterations. So either you stopped out of here, and if you did stop out, it's probably unlikely that you got back in here, because the market actually pushed down and put in a lower close inside that 78.6 of this leg of the move, and we've been punting the point really hard that once you get closes with inside of that 78.6, there's an increased likelihood that you're going to see a break to the downside as opposed to a continuation move to the upside. If you use the that stop level as a soft stop, in other words, you're waiting for the market to actually close inside there before stopping things out, then you'd pretty much still be involved in this trade. Sorry, this is what I want to do. I want to draw this in. You'd pretty much still be involved in this trade, and it would actually be pushing up nicely over here towards those target levels. When you get to this point over here, you're very close to your target levels. Keep monitor it a bit more closely. If you see something like a lower close printing at this point, you actually just want to take this trade off and take targets. Otherwise, you can exercise a bit of patience and wait for the market to capture that last few points for you in terms of the up move. Sorry, so that's what's happening on the FTSE. So finally, let's have a look at what's happening on the US side of the equation. US, we're waiting patiently for the market to pull back into the previous price structure. At the moment, the market is just continuing to push to the upside, putting in higher highs, fresh highs all the way to the upside. Domination levels for this move. Let's do a bit of Fibonacci work projected off this leg of the move over here. We've now pushed through the 1618. This market is really overheated at the moment. You'd expect some kind of a retracement, but it's at this stage, it's just, it's just not playing out. It's just pushing to the upside. You just want to actually wait and see what actually plays out from here, because it's difficult to try and get long on this time frame in particular to the upside when the market's already at those elevated levels. You do want to wait for some kind of a retracement. If you want to trade it, you can drop down to lower time frames like the hourly. So having a look at the hourly, let's have a look what's happening over here. We highlighted this range over here that the market had pretty much stayed in for a huge chunk of last week, and we finally saw that break on Friday, break to the upside at last over there, boom, and then, well, you could have probably looked for that little retracement back into the breakout level as a potential area to get long over there, but it wouldn't have scored you much at that point. Instead, now that's pretty much the move. So you can see quite a choppy sideways trading action on the international market as well. At this point, you could wait for, this is probably a better time frame to wait for some kind of a retracement back into previous price structure if you wanted to get long. So you'd wait for some kind of a pullback and then continuation move to the upside. So putting all of that together, what does that mean for the trading week ahead? It's looking bullish, looking like we're gonna start the week fairly strongly, pushing to the upside. A lot of the international markets are continuing their moves to the upside as well. There could be a potential short-term retracement in the currency, in other words, a bit of rand weakness early on in the week as it sort of consolidates a bit after strengthening quite significantly over the past few days, and all of that will add to pressure for further upside to be playing out in our local market. So we should see that push to the upside early on, and then we're going to wait and see if there's some kind of consolidation we can work with to try and get along this market, with long trades being the favored. Despite the market being so overheated, long trades remain the favored ones in terms of trading direction in the week ahead. So guys, that's pretty much it as we kick off the week. All the best for the trading week ahead. It's going to be an interesting one, and hopefully we'll see some of the ranges starting to open up as we really get our some traction going into the end of the year. That's all for now, and I shall chat to you next week. Cheers.